Hello again. Thank you for joining this webinar, where we will try to review what new tax legislation was adopted in Lithuania very recently. Just 2 weeks ago, President signed this new legislation, and now we know what we will have in force starting from 1st January 2026. Before starting fully, I would like to thank Estonian Chamber in Commerce in Lithuania, as well as Swedish Chamber of Commerce in Lithuania, along with Norwegian-Lithuanian Chamber of Commerce and the joint Scandinavian Chamber of Commerce and all the other organizations who helped promoting the news about this webinar. And we tried to make it relevant to companies at first, to international businesses. So sorry in advance for all those nitty-gritty details about personal income tax. We will share as much as we can, but focusing on the corporate side, of course. And please also kindly note that there are still some uncertainties about how this or that legal new legislation will be interpreted by tax authorities, by Parliament, and for example, some of you may have heard that farmers' regime was with a huge loophole, seemingly allowing everyone having farmers certificate to have a beneficial tax rate. And we heard that already politicians are planning to adopt a new legislation to prevent that. So clearly it is not the best quality legislation that we have, but hopefully until 1st of January 2026, we'll have more clarification, be it by the Parliament and also by the Lithuanian tax authorities as well. But here I am trying to present to you in a brief 1-hour format, what do we have. We'll have to end this event at 4 p.m., but the slides will be shared with all of you tomorrow. And you are also invited to ask any questions in this event window. And also through email later on. By the end of the slides, I'm sharing my email address, and you are welcome to ask any questions. But as always, taxes is not something that everyone is happy about. Usually there are some winners and some losers, so to speak. So to some taxpayers, there are actually some tax burden decreases, and to some there are some heavy increases of tax burden. So let's say some top 5 tax burden decreases are at first for people raising kids. They will have additional non-taxable limit, be it small, but to some people indeed with several children, it can be quite impactful. Also, micro companies have more beneficial measures than before, as already for 2 years it will be possible to pay 0% corporate income tax. And this 10 employees limit was abolished. You no longer have this limit. You can have 12 employees, for example, or even 20, and it will be still eligible, your micro company, as long as it has 300,000 euro revenue threshold not exceeded. Also, to companies in industry having a lot of machinery, for example, they will have possibility of instant expensing of assets instead of depreciation over several years. So it will also allow companies to save some money. Then the fourth measure is for shares received through stock options mechanisms. It will be possible upon selling to have 15% tax rate instead of current 20% upon selling if the 3 years term will be met. And the fifth measure, there is also tax relief for individuals selling 5 years held assets, which currently are 10 years limit. And also there is a new possibility to deduct capital repairs expenses, for example, of an immovable that is being sold. Then also the initial goal of this tax reform was about increasing tax burden and raising additional money for defense. And therefore, there are also many taxpayers losing from this tax reform, and notably with our colleagues from payroll department. Thank you, Inessa, if you are listening to this. We identified that mostly the biggest, let's say, group of employees losing from this tax reform is highly earning individuals whose annual salaries are between 83,000 and up to 138,000. Their tax rate is becoming higher by 5%, and up to this level they have also no social security ceiling. So we believe that their impact will be the biggest. The second group of taxpayers who will also suffer quite heavily from this tax reform are freelancers earning more than 42,000 euro. Their tax burden will get quite close to employment taxation. Thirdly, commercial real estate will also see additional 0.2% tax, which will go directly to state defense fund, but to some taxpayers it can be quite a heavy additional tax burden. Fourth category is, of course, non-life insurance industry and clients. They will have to pay additional 10% contribution from insurance policies amount. And the fifth category is corporate income tax payers. Their standard rate is increasing quite small impact, I would say 1% only. But still, it's a second increase in a couple of years, so it can be also felt by some companies. But let's dive a bit deeper into the measures that we have. And in this slide, you can see an overview of the initially stated goal of this tax reform to provide additional revenue to the defense fund. And I will not stay very long to this slide, just to give you a flavor that the government was planning to allocate some new revenue streams into this defense fund, and hopefully it will be helpful to strengthen the defense. Notably, this completely new so-called security contribution is affecting non-life insurance agreements, and 10% is raised starting 1st January 2026. And there is a plan to allow mandatory insurance to not fall under this additional contribution. So it is helpful to those having to pay the mandatory insurance, such as vehicles, civil liability, and of course some other mandatory insurance groups. But all the other insurance premiums payers will be subject to insurance companies selling those insurance policies to pay to the state budget 10% additional contribution. So this is probably the biggest news. Additional type of tax being installed into Lithuanian legislation. It is quite frequently encountered in many other European countries, so it is probably not so innovative, not so original, but definitely will contribute to prices being raised of insurance instruments. Let's move on a bit further to corporate income tax changes. And the biggest and the most noticeable change is that the tax rate is increasing by 1 percentage point. So the standard rate will be 17%, which is still lower than in many other countries, but nevertheless an increase. And the small businesses tax rate is increasing from 6 to 7% as well. However, the small businesses tax relief of 0% is being extended from 1 to 2 first years of economic activities, and the 10 employees limit is abolished. So it is good news to those starting new businesses. And we'll come back to this point a bit later on in our slides. A new and a very big, I would say, relief and improvement is for companies having quite a lot of fixed assets. They will now be allowed to instantly expense the acquisition of fixed assets starting from 1st January 2026, if the assets are started to be used 2026. And the groups are specified. It's machinery and equipment, then also structures, wells, computer equipment, software acquired right, and even trucks, trailers, and semi-trailers used for economic activities. And what is important to note is that the investment projects relief also survived this tax reform. So you have also this double dip, let's say double depreciation possibility through investment projects relief. And you can choose either to have this instant expensing of your asset, or if your assets are qualifying for the investment projects relief, then you can also choose applying this additional relief and have double deduction. So it makes Lithuanian tax system even more attractive, and I would even say that to some assets intensive companies, disregarding the raising of the corporate income tax rate, it can be even better this year 2026 compared with year 2025. But of course, for the services industry, to shared services centers, etc., the impact will be probably higher from the raising of the corporate income tax rate. So the situation will be worse off than before. So it's quite depending on the company profile. Note also that for the group companies, there is a new limit of group tax loss bringing from another group companies. 70% limit is copied from the carry forward rule from the same company losses, and is quite logical. But Moreover, the condition of the ownership of shares and whether the shares were held for the required 2 years will be examined by the very last day of the relevant tax year, and not at the moment of transfer of the tax laws as it was previously established by the Supreme Administrative Court of Lithuania. So it is as it is, but for us as tax professionals, it is not a very fair game, let's say, by the tax authorities if they invite Parliament to change what the Supreme Court decided. But it is as it is now. It is in the legislation, and we will have to live with that. Nevertheless, there is also a favorable, let's say, measure to businesses that STEM scholarships will be allowed to be deducted from science, technology, engineering, and mathematics. Those scholarships for students and researchers will be possible to expense those of up to 2,500 euro per tax period, and a condition of three-party agreement with the universities. Hopefully, it will have some favorable impact, and this limit will in future will be increased, hopefully. With the corporate income tax, I also wanted to mention that the very large investment projects relief was also prolonged for 10 more years until 2035. And another measure, let's say, favorable for big businesses, but maybe not so favorable to the budget of the state, was that the Pillar 2 was not implemented, and the minimum tax rules were not yet fully implemented in Lithuania, so they will not start from 2026, which is a bit of a relief for large groups, but we will see what the future will bring, and possibly will be entering into force later on in the second half of the year 2026, or even later. Then definitely the biggest volume of changes is concerning the personal income tax, and honestly, it's quite messy at this stage, and a lot of measures not fully clear how to be interpreted in practice. But we will try to summarize those nevertheless. So good news is that this initially discussed 36% rate was abolished, and it was not implemented in the law, but still there is now three new thresholds basically, and there is a decision to calculate total amount of all types of income that an individual is earning, except income from distributed profit. So meaning the dividends will still be apart. Some other types of income. So as always, devil is in the details, but the general principle is that the individuals earning 36 average salaries, this portion of their revenue will be taxed by a personal income tax rate of 20%. And if they earn more than 36 average salaries, which based on current numbers are around 83,000 euro, but next year it will be more clarified. It can slightly differ this amount. Then this additional tranche will be taxed by a 5% higher tax rate of 25%. And the third group is that this income of in excess of 60 average salaries. So as per current numbers, it seems to be 138,000 euro. this extra income will be taxed at a rate of 32% of personal income tax. Notably, the 15% rate will be still applicable to dividends and to sales of retained shares, to life insurance and pension savings benefits, and to social benefits such as sickness, maternity, paternity, childcare, etc. So they will all still enjoy 15% tax rate. And the quite controversial farmers measure that up to 60 average salaries, they will have to pay 15% personal income tax. And there were some clarifications by the politicians that this income type concerns the income earned from farming activities, not from whichever activities, but probably there will be some additional legislation about this measure, because currently it is a little bit like a loophole. But up to next bullet point, that up to 12 average salaries, so currently 27,000 euro income other than employment will be taxable also with 15% personal income tax rate. So it's a lot of interesting measures, but it seems to us clearly that this second bullet point and it concerns probably some very high earning individuals in innovative companies. Probably they are the most to suffer from this tax reform, and hopefully it will not invite relocations of innovative businesses from Lithuania, but it is clearly a risk that the government was touching here with this tax reform. Notable also to innovative companies that there is a limit of voluntary health insurance premiums of 350 euro, non-taxable, but excess above this limit will be treated as taxable income. So it will also affect the situation somewhat of those companies, innovative companies, trying to promote those additional health insurance contributions, and will negatively affect the climate, but nevertheless it will enter into force. Some let's say favorable measures, I would say, is that the selling of shares received through stock option mechanisms will enjoy a smaller tax rate of 15% instead of 20%, subject to that 3 years term is met after the right to acquire the shares. So it is somewhat more favorable measure than before. And now this situation is less favorable. And from also favorable measures, it is noticeable that tax relief for selling 5 years held immovable assets will be possible from year 2026. And currently you must hold asset for 10 years to enjoy it. So it will improve the situation. And there is also even a possibility to deduct expenses incurred for assets reconstruction or capital repairs. So it is kind of moving closer to companies regime, and before only a company could deduct such expenses for immovable assets repairs in their balance sheet. Some other types of measures is concerning the so-called business certificates holding fixed amount of tax payable, and the limit of 50,000 euro is installed into our legislation. So, for example, from real estate, this limit can be quite reasonable from the side of the state budget. And also that the freelancers regime, which we are not describing much more in details, but there are many details. Those freelancers earning more than 42,000 euro annually, their tax burden will get quite close to employment relationship taxation. And like I mentioned also in the summary, individuals raising kids will obtain additional non-taxable credit of 209 euro. It is applicable to only one parent, and with some extensions, normally it is applicable to children up to 18 years old, and there are some conditions where it is also applicable to children even until 23 years old. So it can be quite also interesting to those having children. Let's move on then to real estate tax, and there were a lot of debate about a lot of noise about real estate tax, but for companies, I would say that the biggest change is that an additional 0.2 tax rate component has been established for this commercial real estate, and to some companies it can be quite heavy impact, and can be quite relevant. But kindly note that still commercial real estate reliefs remain, for example, for environmental or fire safety used assets. So it can be quite relevant to review the asset list and before paying the real estate tax, to review whether there is something that can be done about it. For individuals, the primary residence will be non-taxable up to 450,000 euro per one individual, and if family is owning the real estate as a joint property by the spouses, or then this total limit will be 900,000. So much higher, and effectively of this measure, some families can see their tax burden from this real estate tax even decrease after this tax reform. Good news is also that for individuals, the tax administration will be preparing the real estate tax returns, so you will not have to gather all the real estate registry extracts. Of course, it is advisable to double check always if the amount calculated is material, but it will be somewhat easier maybe for individuals not to miss this obligation. That's the mostly important, because in the past there were some individuals quite missing this point and receiving then the letters from tax authorities to calculate by themselves and pay the tax. And there are also, similarly as for individuals' income, the progressive rates, and for example, if you have a total amount of real estate that is of let's say value higher than 1 million euro totally calculated, then several rates will be applicable to this amount, and this portion of value up to 50,000 euro will be taxable by 0% tax rate. Then 0.2% tax rate will be applicable to value up to 200,000 euro, Then the next tranche is for value up to 400,000 euro, it will be 0.4%, and so on and so on. That the tax impact will be progressive. Of course, the taxable value is very relevant, and it will be recalculated more frequently, but taxpayers still have a right to hire their own evaluator and review this value. It is possible for companies also to ask their tax advisors, their auditors, for example, to review the values of their real estate. So it is also possible to double check if the impact is material. There might be some place for discussion about what the value of your real estate actually is. Moving on to value-added tax and excise duties, the changes were also adopted, and notably the reduced value-added tax rate from the previous 9% will be raised to 12% for accommodation services, for example, hotels, industries, and passenger transport services, as well as attendance at art and cultural events and institutions will also be slightly higher tax rate. And good news is that books and non-periodical informational publications will see the tax rate lowered to 5% from the actual 9%. This is quite good news maybe to this industry. However, the 9% preferential VAT rate for heating, firewood, and hot water will be abolished from year 2026, and the standard 21% rate will be applied. That will definitely impact somewhat on the heating prices in Lithuania. Additional small note to financial services industry is that it is not completely new to those deep down into the situation of financial industry. And previously, this new measure was already in the Court of Justice of the European Union, but now it was also inserted in the law on value-added tax, is that services of administrative, physical, technical, or similar nature, which do not result in change of the legal and financial situation of the parties to that transaction, shall not be by themselves considered as the provision of VAT-exempt financial services. So it's not completely new, but a reminder to companies in this industry to review their situation and analyze whether they are in the correct situation of the VAT treatment of their services provided by them, or also acquired from abroad, where reverse VAT duties can also apply. Excise duties were also amended, and notably sugar was taxed by excise duties. I will not linger much more. It is quite a trivial impact to consumers. I would say you need to really be a heavy consumer of those beverages, for example, to really notice the impact. However, it will definitely affect the industry in this area, and it is a move that was not totally unexpected. Some countries such as Denmark, for example, and some others already have it, and it was probably the matter of time when it will come into Lithuania as well. I would like to share also some likely developments and pitfalls. It's rather guesstimates, I would say, but hearing some thoughts, some remarks from some clients, from some public opinion in Lithuania. It was quite public secret that some highly earning individuals are thinking about rather moving from employment or from freelancer mode to their micro companies regime. So probably it will be having this increase the number of companies overall in Lithuania, of micro companies. And high earning individuals, as well as their employers, are quite likely to try and structure their 2026 earnings through micro companies and dividends to enjoy the 0% new micro companies taxation and initial regime, as well as 15% then personal income tax rate on dividends. However, it is very, very important at this stage to notify that we, as audit company, as auditors, must also raise the attention of companies and individuals that both the state tax inspectorate and labor inspection, they have this practice and tools how to apply the substance over form principle, and if the relationship is actually staying the same, as the employee is still going to work, still has to submit to work rules, have same income every month from the company, etc., etc. There are many indicators of this employment relationship, and most likely the authorities will be also eager to try and reclassify some of those moves to company regimes as being like a hidden employment relationship. So I am not really saying that it is impossible, but in every case, the devil is in the details, and the taxpayers considering those moves, they must analyze very carefully with their lawyers, with the authorities' publications, recommendations. Also, where is this red line, let's say, between employment relationship and company regime of civil services agreements. The second takeaway that we as working a lot with companies see from this tax reform is that it is advisable for corporations to review their long-term fixed assets, and it can be very relevant to carefully choose between investment projects relief, which is still available and allows double deduction for fixed assets, and the new instantaneous depreciation, which allows instant deduction, but just one time of the expenses, and one actually eliminates the other. You cannot utilize both of these measures, but it is advisable to carefully review your assets to decide which one to apply to which assets. So the same company can use both tax reliefs, but not for the same asset item. So that's the key takeaway from it. And also, it is now possible to adjust depreciation norms and depreciation groups without the pre-approval from tax authorities. Previously, it was required to draft a letter and send to tax authorities and obtain their pre-approval. So now it will become a bit easier. It's accounting policy change, so still some procedure to follow, but a bit easier that you don't have to ask from the tax inspectorate beforehand. And on the same line, for real estate items, the taxable values and potential tax reliefs to mitigate the 0.2% tax increase is also advisable. And last point to our clients and colleagues in financial services industry, that this financial services exemption is also very relevant and must be reconsidered whether it is still applicable after the new legislation will come into force. Brief reminder of tax penalties, and we hope you will not have those in your situation, that the unpaid tax can be asked to pay to the tax authorities by the tax inspectors, and also a penalty of 20 to 100% of unpaid tax. So effectively, you can pay the tax that you seemingly save today. You can be asked from tax authorities to pay twice, and even with almost 10% of late payment interest per year of delay. And there is also this stigma of reliable taxpayer reputation, which some companies unfortunately lose for still quite minor infringements for 3 years, and it is quite a heavy burden then for the next 3 years to carry this so-called stigma. So these are the main developments that I wanted to share with you today, and we still have some time. I will I will try to answer then now some of the questions that we may have, and let's see. I'm asking colleague to share how we can see those questions here. Hmm? Hmm? So we have a question about the tax burden decrease, about the instant depreciation, whether it is applicable to assets acquired after 1st January 2026. From what I remember reading yesterday, the corporate income tax law, I believe it was mentioned that assets that were started to be used in year 2026, pradėtos naudoti 26. So I can definitely double check about how it is in the law, and will reply with more details. But from what I recall reading the law, it was at some point during the legislation drafting process, it was for the assets acquired starting 2026, but then seemingly it was about assets that were started to be used in year 2026. So not definitely, but I will double check and come back. It seems that some assets acquired in year 2025 but started to be used in 2026 could also benefit from this instantaneous depreciation, instantaneous expensing regime. And I will confirm to you this question in writing as well. Another question is about the 15% personal income tax rate on investment profits in Lithuania. I believe it is touching the investment account regime, so it is unchanged. Investment account regime is still existing in this tax reform, and this income will not be touched. It was not made worse. So I will clarify both to both respondents, Olga and Thomas, by email. And I also invite all of you to share your questions through the email that will be circulated by the end of the slides, and feel free to ask your questions. Me personally, I also have some questions to maybe the parliament who was adopting this tax reform. Not all the measures are clear, and I was still calling some colleagues in the industry working as heads of tax in other companies to discuss this or that measure. And we all agree that some of these measures are not fully clear. What was meant by those parliament members proposing, and what was meant by the parliament finally adopting this wording of this or that legislation. So it is quite interesting, and unfortunately for the taxpayers, the government was rushing to adopt, to make the parliament adopt this new tax reform due to 6 months mandatory period before entering into force of any new tax measures, making the situation any worse for the taxpayers. It's a Lithuanian constitutional rule that the parliament must follow. And luckily it was respected that we still have 6 months before entry into force. And we will be repeating this webinar, especially for our Estonian friends in September, that hopefully some measures will become a little bit more clear by then. Probably some amending measures will also be implemented in autumn, but they will not be able to make the situation any worse for the taxpayers. Any new measures making worse the situation for taxpayers, it will be possible only after 6 months. I see a couple of more questions. Sorry, I missed that there are some other questions as well. And Benedict is asking about freelancers earning more than 42K. Whether it is looking at the pure applicable tax percentage rate. We were calculating with colleague Inessa Grecia from our Grand Thornton payroll partner, and we have quite elaborate calculations and looking into how this real net effect will be. And it seems to us, based on those Excel calculations, that this effective tax rate and what the individuals is able to bring home is getting closer from this freelancers taxation mode. Starting 2026 will increase. We can, I hope, also share the calculations with you, and if your email is available, then we will contact you after this event to share a bit deeper calculations insights with you. A question from Yeva is how much will excess health insurance will be taxed? I do not remember very precisely. I will double check and come back to you whether it is 15% or 20%, and we'll also let you know after this event. And the question from Justin, what tax income, Justin, from what tax income from rental properties be subject? Maybe it is not fully clear whether it is renting by as individual. If it is individual, then it is possible to have this fixed amount of tax under some conditions. It's the Lithuanian verslo liudijimas, the so-called verslo liudijimas, which allows a fixed amount of income tax to be paid, but a limit of 50,000 euro was inserted. And there is some flexibility. You can choose this verslo liudijimas still in year 2026 if you qualify to it, and not qualified income will be taxed by other rules. And Raimondas' question is also about social security tax ceiling to those who earns more. I believe this social security ceiling is then kicking in from this threshold of 138k euro as per current year, and then no additional social security is applied by your employer when calculating your employment income. So the companies are past this threshold, are not calculating additional social security. This threshold is not touched this year. In terms of money, it will slightly change due to average wage recalculation statistically every year, but the general idea remains the very same, that no additional social security is being applied. Therefore, it seems that to us that this a group of people who are not yet enjoying this, let's say, social security ceiling, so below 130k euro, especially salaries, they will still have to pay social security from that, and the impact to them seems to us the highest. I will contact each and everyone who asked those questions as a follow-up from this after this event. Now, as no other questions are appearing, I would like to thank you all for your attention. Please stay tuned. Please subscribe to our newsletter, and we will be sharing updates gradually wherever there are new updates. We advise not to rush now. You have still 6 months before those measures are entering into force, and definitely there will be news from the parliament and from the Lithuanian tax authorities about how this or that measure is implementing, especially in terms of personal income tax. How will tax authorities be calculating all the income, how they will interpret this, and it will be quite interesting new developments definitely in the autumn as well. So thank you all, and see you next time, hopefully soon in other events of Grand Thornton or elsewhere.